What's going on, family? Hope you're doing well. It's your boy Romz. Today I'm going to briefly go through how to trade market reversals in a way where you're not guessing when the market's going to reverse, but you've had a couple of confirmations to show you that when the market's going to reverse. Okay, so I'm going to make this quick. So what we've got here is Euro USD. All right, we're currently in May 2023. Whenever you're watching this, it's now Sunday, the 14th of May 2023. Right, so you can see currently we are bullish on the 4-hour time frame. Right, so we're currently bullish, and the key things to note here are the fact that we've had some key lows hold. Right, so this one here, that held. Let's do that. Right, so we had just inside here, you had a sweep of some liquidity, and you had a new high up here. And you had down here this level hold, right? So as soon as this level holds, okay, you know that the next target is this high as the drawn liquidity. That is the next target as the drawn liquidity. The market typically is only ever doing two things. That is seeking liquidity, or the market's rebalancing. So the market's looking to take out internal liquidity or highs and lows, or it's looking to rebalance to fill basically imbalances or liquidity voids, depending on what you call it, right? So in this instance, we can see here that price is bullish on the 4-hour, okay, but this low held, okay. So even when we were down here, and then we was showing bullishness, I did not expect the market to reverse from this high. Although yes, it did give a reaction, gave reactions, but you can see the internal lows within this all held, right? So we can see here, the market came up, came close a few times, but the lows were holding. This low didn't get taken. This low didn't get taken. And this low didn't get taken. But then, you know, this high was then swept, right? So understanding that those key things is important. If a high or low doesn't make a new high or low, typically, and you're trading with the trend, that would mean that high or low is going to get taken out. So because this low made a new high, right, it's probably going to hold because this low swept liquidity and then made a new high. There's more to it than that, but those are the basics. But because we are in a pro-bullish trend, we're in a bullish environment, price came down, and then this low completely held, right? Because this low held, this high failed to make a new low. So now this high is more than likely going to get taken out. That's how you have to look at things, okay? So what's next though? The next thing is understanding that if you're looking to try and catch retracements, so you're trying to catch trades from, you know, the premium area of the range, to try and catch trades back into the discount area, so somewhere in here, if you believe that this area is going to hold, you have to try and, you know, time the market. When I say time the market, understand when the market is highly likely going to reverse. Not guessing just because market's taking a high, it's going to reverse, but having protocol and having an understanding as to why the market should or shouldn't reverse. Okay, so typically, if we're in a bullish environment and the market has taken a new high, then we would usually get some kind of retracement. So what a lot of us try and do is we try and catch those retracements, but it's understanding when to enter, when to try and catch them, and when not to. You can't just go in blindly, okay? So what have I seen to give me an idea that I want to try and catch a retracement? Here, what you can see is the high's been taken now, okay? So now we're looking at, okay, when is price going to now reverse? So if I look down on the 1-hour time frame, or actually let me stay on the 4-hour for a second, you can see here, the high's been taken. So what's key here? What's key here is the high's been taken, but then price has made relatively equal highs at this point. And then you had the sweep, which is this here, the sweep, right? And then price came and gave us a market structure shift, the ICT would call it, Okay, so the level that made the high, that took this, that swept the liquidity, was then broken. So it gave us the market structure shift, but that's not that, because you can't just go off just off of that, because the market could have come down, respected these lows, and it could have just went higher and taken out this high as well, right? So you can't just go off of that. It's understanding that yes, this is a market structure shift, but what happens next? What happens next is key. The liquidity sweep plus the market structure shift, but then let's see what happens here. Up here now, this high now holds. Okay, this high now holds. So this high holds, and then this is when the reversal takes place. As you can see, from here on, gives a reaction from this low, but then it starts to reverse, right? So what are the key elements that I want to point out here? So these are key things you want to look out for. Number one, has the target been met? So when I say that, the target in regards to the draw on liquidity or the rebalancing. But the thing is, when this happens, what you want to be looking for is some kind of liquidity being taken as well. So in this case, the high up here on the left, that is the liquidity, and then you had the internal liquidity taken too. If this was the other way around and we were actually in a bearish scenario, okay, the low may be the liquidity, but also if you're trying to catch the pro move, the liquidity is not going to necessarily be external, the liquidity might be internal. So for example, if I want to try and catch the buy now, I might be looking for the price to come down here, but I think that this area is going to hold. So I'm going to potentially look for a buy from this zone here, or something in here, wait for price action to play out, and then when it gives me my sweep, market structure shift, and then enter on the mitigation, and then go higher, right? But you know, if this was a buy, you wouldn't be going for this low. You're expecting this low to hold, but you wanted to take out all of this as liquidity, trendline liquidity. Hopefully that makes sense. I can go into that deeper on another time. But so the first one, has the target been met? So the target was the draw on liquidity in this instance, right? There was also internal liquidity taken. So price action gave us that internal liquidity sweep and then gave us a market structure shift. All right, so has been met. Internal liquidity taken, that's the question mark, right? So has there been a liquidity sweep? Number 3 would have to be the market structure shift. And number 4 would have to be, has the new strong high or strong low held? So when I say that, what do I mean by strong high or strong low? The strong high or strong low is typically when the market or price has swept liquidity and then given us a market structure shift. Okay, that's what I class as a strong high or strong low. See, the thing is, what you want to try and do, if you're anticipating a reversal, you want to try and get in here. So all you have to try and do is look for the same price action, but on a smaller time frame. Okay, those are the key things. Okay, has the target been met before you look for a reversal? Let me title this: how to anticipate a market reversal. Okay, so has the target been met? The draw on liquidity or the rebalancing? Has internal liquidity been taken? Okay, so number 1, has target been met? Yes, left hand side, this target was met. Draw on liquidity. Has internal liquidity been taken? On this occasion, it was these highs here, this high here, and here, swept, yes, followed by the market structure shift. Okay, so what you want to make sure that happens is after the sweep takes place, the market structure shift needs to happen straight after, right? Has the new strong high or low held? Okay, so in this case, it's a strong high. Has it held? Yes, you can see it's held. And if you also go on to the lower time frames, you can see that tapped in once, price tapped in again, and then, you know, price broke lower, taken out, apologies, price broke lower, taking out multiple levels of internal structure, and you're like, okay, we're looking like we may, and this one as well, this is key, that one here, yeah, we may get a reversal here. So this easy entry, boom, and then yeah. So hopefully this makes sense. Hopefully it's giving you guys a little bit more understanding in regards to market reversal and how to use structure and how to use liquidity to look for market reversals. So don't just try and enter and try and catch the tops or the bottoms of the market. Don't try and do that. This is very like basic video. I'm not going into much detail at all, but I just want to give you a little bit of insight in regards to how people might catch the tops of the market using structure and understanding of liquidity as well. So hopefully this helps. Don't forget to hit like and subscribe and drop a comment if you've got any questions, and I'll speak to you soon. God bless. Take care.